Welcome to Trading Lounge and the US Indices for Thursday, April 28th, starting with the S&P on the daily chart here. This has been our original count, and I want to go through the this particular count and also our two bearish counts, then go to the intraday and also have a look at our trades and then call the next moves in. So this one here is an oldie, but it's still in play. So wave 3 here with an A and a B and a C for wave 4, wave 1 and 2, and then 1, an A and a B and a C here for wave 2. If this market breaches this current low just here, then it's invalidated at that point. So as I mentioned before, the wave C here coming down is pretty sharp, so we'd normally expect to see wave to be lazier. So this is probably not the count, but it's just interesting to see it play out to the right, to the last point, so to speak. Okay, so for the bearish counts, we've got two counts on those. One of them, oops, daisy. One of them is this one here, where we have wave A, B and C wave here. Between B and C we're looking for 5 waves of 1 and 2 and 3 and 4 and 5 here, and then 5 waves in between wave 3 there. We'll need to go in and have a bit of a look at that. I do want to talk today about this 1 and 2 here. I think that we need to readjust that so it's a little bit like this, and then we can look at, move that out of the way, move this down, move this out of the way, move this down. Wave 3 will be quite long in that regard. Wave 4 will touch back. Wave 5 for wave 3 here. It's all a little bit fiddly. I'll just get these out of the way. A bit of a process, so just adjusting this somewhat here. So I'm thinking that we're going to get a little rally back to here, and then we'll get the third wave down, and the fourth and the fifth wave here, and then we can just adjust these here like so. Then we still need wave 4 here and wave 5 to go down after that. That's one way of looking at it. The other way of looking at it, just as valid, is this way here with a WXY. And in this case, we look for an A wave, a B wave, and a C wave on this low, then back for a 3-wave move that would be higher, and then this move coming down here in 3 waves. So there's the count. So in one way or another, we're looking for a rally. And let's go back to this, not this one, but this one here, just before we go to the intraday. So we're looking down at 1 and 2 and 1 and 2 and 3, 4, 5. So we're going to go in and have a look at that, and we can start on the 5,000 tick chart. Nothing special about that. So from the top here, we've counted down as 1, 2, 3, 4, 5, an A and a B and a C for wave 2. We'd look to short at this point. We've been looking down all of this here. Now, the interesting thing here is that wave 1 is cool. That's all good. Wave 3 is okay. Now, 4 and 5, wave 5 was a little bit small. But then when we look at wave 4 here, we have to view it in terms of a 38.2% retracement level, and which is 40% roughly, and the market's moved over 50%. But I'm not too fussed about when that sort of happens, and I like to call that a wave 4 now, and because markets always like to pull back to the closest largest number, so these numbers psychologically can traders trade to those numbers and buy and sell those numbers, and so it can skew the count a little bit at that point. So we had been looking at this here, as you know, as well, wave 1 and 2 here, and then wave 1 and 2 coming in here roughly. We can discuss that and go over that and look down from that point, and if that is the case, well, then we can just short below that low there. It's not an issue at that point. We'll be talking about that, but let's just go to the 2K here, just drill in a little bit where we've had some trades here and we need to protect them. So in this situation here, what I want to show is this move here in the European markets, okay, because it's just got a better formation. Let me go to the DAX or something. The EU stocks will do the trick. So the stock 50 here. So in this case, it's kind of a bit clearer. We've got the move down as 1 and 2, and then 3 here and 4 here, and then coming down for wave 5 in this case. So we've got that nice 5 waves here. And I noticed this yesterday because I do the Euro video after the US video. So yeah, and then I was thinking, well, we better bring the stop way down here then, you know, but at the same time we'll go short below the low here. So we've been stopped out of this, so that's good, but at the same time we need to consider with this stock 50 here, and I think we could do the same with the what's the name, the US indices. So we can look for a move up there, you know. And this would be, if I can just copy these here. And the other thing too is in a bull market, we would look for Thursday being the bear day. So in a bearish market, we can look for Thursday to be the corrective rally as such. So that could be sort of interesting. So in this case, we'll go back to the 3.8. But also basically coming back to the wave 4 here. That's what would be sort of viewing it as there. And we can lift this short trade one now all the way up under here, and you can bring that up even there further. I'll talk about that later. But we've come out of this trend channel now, so that's another thing that, you know, is looking you know, chirpy at that point. This is just another count here with a B and a C here, but I won't go into that at the moment. So yeah, I mean 1, 2, 3, 4, 5 and ABC and then down. So or that other particular count that I was viewing before. So does that mean that we can do the same here? So if this top is taken out, then well, we've got a problem at that point, you know. So that means that we do need to bring this stop down. We can put it on the top there, we can bring it down, we can bring it down to about there onto that top. Actually, I'll just lift it up a little bit there, just on top there for that, just in case this is wave 1 here and 2 here, and, you know, pulling back down at that point. So first of all, protecting this trade, this one, and well, this one here is sort of, you know, a little bit on the red side, but overall everything is quite good. So we need to look at this with wave 1 here. So I'm just going to go to another chart where I've done a little bit of work on this. So in this case here, looking for this move to the upside here. I'm looking at this here as, well, I can look at this as the A wave here, then an A, B, C for the B wave here, and up for the C wave here. So I was sort of thinking, you know, basically we've got to move back up to here and counting this down here as 1 and 2 and 3 and 4 and 5 for 1, an A and a B, and yeah, just basically looking for a move to there, you know, in 5 waves. I don't think, I mean, I could look at this here as the B wave as well, so I'll just plot that there. That could be wave 1 and 2 here and going up for 3, 4, 5. Do you know what I mean? Or we have 5 going from this point up. But yeah, so we should be able to fade the market in the late Thursday afternoon to the late session. I'm in Australia, so the dates, things get a bit warped, but toward the second half of the session anyway, the afternoon session, you could probably look for weakness, but at the same time, in one way we'd need to get 1, 2, or from this point here we'd need to get, this would be wave 1 up here pulling back. It would hit that supply, pull back, nothing really stopping it for the 3rd wave up here, so something like the 4th and the 5th at that point. And if you can see 5 waves moving down after that, that's really the one that you want, or you can short the top and then we should be coming down at that point. So that's where we are really. So all I can say, just to recap, if this top is taken out, then you know that we're going up to the 4-3 at that point. Can move a bit higher into that 50-60%, which I've got up here. But the 300 is going to be a game stopper, and the old high here is just going to help support that situation. So just going back to this 2K tick here, let's just be a little bit more adaptable. So if that low is taken out, then we just need to short. If that top is taken out, then we need to be out of the market, and we'll be looking for a move up into the 50-60% up here. So we can bring that down to this point. Just about copy that, I think. Put that there. It might not quite get there, you know. That's the thing. I mean, the thing that you can look for here, if it's going to get to the box, it will need a classic trading levels pattern. It would need the arrival, the reaction, the first high above the level, and then it would have this ABC point here like this, and then it would move up from that point higher if it's going to go, and you need to be long at that point. But once it's done 3 moves here, then you can also look to short it here, because anything below 3 moves, 3 legs, then it would have to be bearish. And what it normally does is hit on here and then come back. Now you can sell it at the tops here, you can do all that, you just need to manage your risk, and it doesn't matter what you do, as long as you know what you're doing. So yeah, that's what we're looking at the moment here. So it could be correct, we could have wave 1 here and 2 here, but we need to see that breach there. And if that is breached there, then we also, the 4,000 is the target there. We can also look at the 150 here. So this is for the 4,000 here. I call it a medium level in terms of the trading level. So it's a medium level. Then we've got 100, 200 and 300. They make up group 1 at that point. Once the number 2 here becomes the retested resistance, and we're doing that by putting it here, here and here. Once it becomes the resistance, then the market will be focused on to being pulled down by the closest largest number, which will be this one. But on the way down, you could also look to short below the 4150, and you'll need a classic trading levels pattern like this here. So you know the routine. The market can go back up above this level before it comes back down, and between if you want to refine things, between the 100 and the 200 here, we just use the Fibonacci numbers 1, 2, 3, 5 and 8. So in that case we'd be looking at group 1 here of 10, 20 and 30. So that's group 1. Then you've got 50, the midpoint, and then you've got number 8 here. When we've got 8, we talk about group 2, which is 65. So 65 and 72 roughly there somewhere. So when 70, we could also short there as well. So when group 2 here becomes the resistance, you can also short there, because if group 2 becomes the resistance, you know that it's leaving this larger number at this point. So yeah, but under this case, we've got this short here under here anyway. So, but if this comes back down here, it's just going to bounce off that low and go back and check it. So you just got to keep refining it. The skill set needs, you know, you just keep refining you just keep refining it till you're happy with the state that you've got it at. You know, you can work it into micro levels on a 5-tick chart as well. So, you know, really get in there and get it right. Okay, so just to recap this, it's possible that this rally we could see into Thursday, with Friday fading and then moving back down. If I'm wrong, then we just need to short below these lows here. Let's move along a little bit. It's the same with the SPY here as well. We may need to look at, we've had trades in here, but I've just taken them off. But, you know, we can short below here. Otherwise, we're looking for this to be wave 1 here and wave 2 up here. I mean, there's a good case, there's 5 waves here. So it's a good case that we've got 1 and 2 and 1 and 2 in this scenario. But yeah, we'll see. Just taking precautions. The triple Q here, I'm doing the same thing again here as well. So we've got positions in here, we're bringing the stop down to here to protect those positions. If this wave 1 here is indeed over here, then we're going to be back up at the 330. and then we'll be down at that point. So you can look to short over that side. And if if Thursday is bullish, then Friday, Monday should be bearish. So the NASDAQ as well, we need to do the same for the NASDAQ. So we've got a few positions up here. We've got wave 1 and 2 here, and we're counting down here as 1 and 2 and 3 and 4 and 5, a little bit different here. The NASDAQ's been weaker in leading the market down. So we've got wave 1 here and wave 2 here for that. We've got another short position in here. So we've got most of them protected. We're going to go short here. If we look at this as 1, 2, 3, 4, 5 here, that kind of looks okay at that point. Still looks like it wants to, it's sitting square on that major trading level here, on that 13 here. So the market looks like it wants to push up from here. So taking that length here to this length here, we're going to come back up into the 13. If it's going to move up, it's going to move up, somewhere into between 300 and 500 in this space. I don't know if it'll get to that height up there, and it just depends on how we want to count this in terms of an ABC pattern to the upside here as well. So we can look at it in different ways. We can look at this as an ABC for the B wave here, up for 1, back for 2, up for 3 here, and 4 and 5 in that case, and then move down from that point. So the thing here is that we're going to go down, and we're going to do the same thing again here. We're going to protect that situation there, but we're going to look to go short here just in case it does come down from that point. And we want to position under the 13 at this stage, and we also want this group 2 here as the resistance at that point. If it does move up here, then you need to look for a short thing up at this point here. Yeah, it's always, if I say it, it's always easier said than done, isn't it? So I mean, what I can say is if you see the weakness on the Thursday in the afternoon session, it could be, from 2:30 onwards. If you see that sort of weakness there, or 2 o'clock onwards, then you know that the market's going to be turning down. You need to find yourself an entry. And if Friday is down and closes down, then Monday's going to follow through. So then we'll be down at that point. This, after all, is a bounce. So this market, the NASDAQ, is leading to the downside, and it's bouncing off this 13,000. It's a bounce. That's what it is. Anyway, we'll see how that goes, but we do need to protect what we've got at that point. And then over to the Russell. This is just the ETF here. We've got B wave up here, down for 1, back for 2. Same sort of scenario here, but this has also got a nice 5 wave structure here as well. So it may not go back up like the other ones, and it might have just been the European markets in that case. Still a nice 5 waves down in this structure here as well. I'll go to the Russell itself in this case. So we've got positions here for this. We've got, we've had a few, all through this leg here, been looking after them, took some percentage here, and now I just want to protect it all, so I'm just going to do this, and it will probably get me into trouble, but, I mean, you have to sort of act at the right time. So it will probably just go to here and then go down again at that point. So, but you do what you need to do. That's the important thing. And, if it gets above the level here and takes that out, it ends up here somewhere, and then comes down and finds this as the resistance. Excuse me. Then we need to, if this becomes the retested resistance here, then we need to make a move on that, and you'll just get the classic trading levels pattern here. So it'll come through, go back and check it, and you've got the first low below the level. It'll probably be at 19 here, at 890. It'll probably be at that level. Just block that in there. That's the closest largest number, and then you can just short under that point. So really it's just yeah, it is what it is. So see, in this case here too, we can look at this as wave 1 and 2 here, and then 3 and 4. I know wave 4 is high, wave 5 is a bit short too, you know. It's a bit short compared to wave 1 and this one here. So it could very well be that you know, we've got this down here at this point. But it's interesting, even if I do label that wave 1 here, you know, then this is lower here at this point. So it's sagging in a way, you know, so the whole thing is not very strong. It's not going to go up a lot, you know. I mean, obviously, you know, the stocks in the Russell 2000 are, you know, they're not tech stocks as such, you know. The tech stocks, they're either powering to the upside, powering to, you know, they're the powerhouses, and you know, they make the moves. But the Russells, you know, stocks, I don't know if they've got the strong earnings that the other tech stocks have got. So anyway, it's not my field, so I can easily be wrong. But yeah. Anyway, we'll look after it. So we have to get out, we'll get out, and we'll just get back in. As simple as that. Just better to be safe than sorry and get stuck in some larger rally, you know. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.